And welcome back, everyone, to another RLT Pivot podcast. My name is Tracy, and I am again joined with my amazing co-host, Mr. Dan Jensen. How are you, sir?
Always good to be back for another episode of the Real Life Trading Pivot podcast. And we have a very influential and experienced options professional, I guess is the best way to put it. So we're being here joined by Lagator with Options AI. How are you, CC?
Great to meet you all.
Awesome. Yeah, it's a pleasure to have you in. So get us started, I guess, from the beginning. Who are you? What is Options AI, and kind of how did you end up here today?
Yeah, so my background is in options and trading, and specifically market making. So I was an options market maker, and what that means is, generally for your audience, used to trading and on trading brokerage platforms and things like that. When you go to trade, buy Apple stock, right? Generally, that's like so liquid that a lot of the times when you're buying Apple stock, there's somebody else out there selling Apple stock at the same exact time, right? And you're paired up and you've, met at a price and, it trades on an exchange and you're filled, basically. With options, there's so many strikes, there's so many expirations and things like that the chances of you putting in an order to buy a call or a put or something like that and actually somebody else trading that same exact strike at the same exact time are pretty rare. So what ends up happening is market makers, provide the majority of the liquidity in the options market. And the way that works is it's essentially like being a bookie almost, where you're weighing all of the, the demand for buying of options and the demand for selling of options. You're pricing all of those things on the fly, trying to basically, not have like a really imbalanced book, meaning like you have like a ton of risk as a market maker. You're trying to keep your risk, in check. And you're basically the one adding liquidity, and you're competing with other market makers for that order flow on pricing and things like that. So that's my background. And, as a market maker, you see all of that order flow coming towards you, right? And one of the things you notice as a market maker is the difference between how retail options order flow looks and how, institutional options order flow looks. And institutional options order flow is hedge funds, mutual funds, money management firms, big, not necessarily massive money, but big enough money that the people, have somebody on staff that knows what they're doing in options. Mm-hmm. And the way that institutional order flow looks like is mostly multi-leg options trades. They're spreads. They are, if a hedge fund thinks a stock is going to go higher, they basically have a plan as to how high they think that stock's going to go. They're predicting a magnitude of a move, not just a move, and they're positioning in options for that specific move. And they're not wasting money beyond where they think, where they would want to get out of that trade to begin with, right? So they're sort of positioning all that ahead of time. And then on top of that, they're doing things like adding income to their positions, right? They might have like a large holding of a stock. So they're doing options around those holdings, or maybe in times like, the uncertainty of the markets right now, they might be adding hedges to their portfolio so that they can actually, instead of being the sellers out of panic at the lows, they're actually positioning to be able to buy down there, right? So all of those types of things of like having strategies, not wasting money, having your portfolio sort of planned out or your positions planned out. Now, unfortunately, the retail side of options order flow tends to look like lottery tickets. And it is basically, people looking at the options market and saying, it's really expensive to buy Tesla stock. But if I just go out and scan the options chain and look for something really cheap in the options chain, I can afford $1, right? The problem with that sort of strategy is you might get lucky once, but the majority of the time, the probability of the options market is not on your side. So my co-founders and I, when we sat down to, we had this idea of putting a retail brokerage platform out there that kind of changed the way people perceived options. And we wanted to translate that thinking that institutional trades look like into the retail space. And what that means is a really heavy focus on multi-leg options, spreads, and that's not just, debit spreads, that's credit spreads, that's income, that's hedging, things like that. And what we found when we started to do that is this story could be told very visually. And the way that most investors and active traders look at the market is they're looking at charts, they're looking at support, they're looking at resistance, they're looking at momentum, they're looking at sentiment and everything like that. The options market is telling that story, right? So the options market, before you even arrive at a trade to buy Tesla stock or something, the options market is sort of already telling you a bunch of information about where everybody is positioning in that stock ahead of time. And that's one of the first things that we decided on, is we were going to visualize the options chain. And we put that out as like an expected move. So when you see a chart on Options AI, you see the historical chart, but then you see where the options market is pricing the future. Now, that doesn't mean the options market is correct, but it means where everybody from the Robinhood account with $500 to Goldman Sachs is pricing the potential moves in Tesla. And it would sort of, we compare it to, if you were going to place a bet on a football game, like not knowing that information to start is like not knowing the spread of the football game, right? You would never just be like, oh, I think the Cowboys are going to win, right? So that's where we start. And then what we do is, if you say like, I'm bullish, or I want to add income, or I'm bearish, or I want to hedge and things like that, it's as simple as either trading on that chart based upon those sorts of stock levels, or simply saying, I'm bullish, bearish, or neutral, and Options AI showing you, several trades that reflect that view. And a lot of that is done off of those things, like the expected move from the options market. So for instance, if it was $100 stock and you had a 2-month time frame in that stock and you were bullish, Options AI would be showing you various ways to do that without wasting money above the options market, saying that this stock is most likely only going to go up $10 in the next 2 months. Well, then you shouldn't be buying calls, more than $10 higher. You should be selling calls above that level versus, what you're buying closer to where the stock is trading. And so that's sort of, and it sounds complicated, right? Like options sound scary. And when people start to learn and they start to dabble into options, there's all these Greeks, there's all of these things. But when you think about the core parts of these trades, you see them on a chart, and you're essentially saying, oh, I get this. I'm creating a profitable zone of this trade from here to here, and then a defined risk red zone of this trade from here to here. I know exactly what I'm rooting for, and I've done it, and I know exactly what my probabilities are. And so all of that before, and it sort of gives you the confidence that I actually know what I'm doing with this trade. And so we sort of cater to, people that are looking to incorporate options. They're the type of person that wants all of the tools, at their disposal. And they maybe, for whatever reason, it's our personal opinion that most legacy brokerage platforms do not do this well. And it's because they're sort of, they're trying to be like all things to all people. And they're overwhelming the user somewhat with, basically that you need to know everything about, all the nuances of this trade. And what we're saying is that's fine. You can see all of that on Options AI, but really first concentrate on this 95% of this, which is the most important, because if you don't get this, you shouldn't be doing these trades at all. You shouldn't even be like looking at an options chain. Then, as you sort of trade and you get better and you become a trader over time, you'll start to understand those little nuances, but that shouldn't be tripping you up, because that could confuse you on the actual 95% that's important.
Now, CC, I don't trade options very often. And as we discussed earlier off the mic, that I don't have the tools in Canada that I personally like But that being said, I have checked out your options AI site, which unfortunately is not available to Canadians at this time. It is extremely intuitive. That's what my
Right.
first impression was. So not having an options background, looking at it, this made options seem really simple to me. I thought that it was a very simplistic, intuitive, very informative platform. So I do like it that way. Now, the question is, do you are you an actual brokerage, or are you just a tool? Like, can people sign up with an account and actually trade through you, or are you a tool that they can use to then make options decisions in their own platform?
Yes. So we are a brokerage, and that explains the Canada. We are domestically in the US at the moment. The brokerage aspect, one of the things we also decided early on when we were setting this up is that there's free brokerage services, like the Robinhoods of the world, and then there's, which are sort of bare bones, is particularly when it comes to options. Like, you kind of need other tabs open, right? If you were going to be doing an options trade on Robinhood, it's particularly a multi-leg options trade. And then there's like the really sort of professional tools, legacy brokerages, right? Which, we looked at and we were like, that's really overwhelming to the average user. And you really got to know what you're doing to be able to use those tools. Even I, like when I'm on one of those brokerage platforms and I'm an expert in this subject matter, I always have that rush right before. Did I just put that trade together correctly? Did I press the right, buy, sell, and everything like that?
Yeah.
Right. Like, it's kind of terrifying, right?
Yeah.
And so all of those sorts of things. And so we were like, well, there's nobody like sort of filling in that middle. And then when it came to, setting up the brokerage, one of the things we did on pricing is we're like, all right, well, we feel like we're a premium service that is reinventing what like the really sophisticated platforms are doing, and doing it, as you said, like, making it more intuitive and a little bit more, straightforward. That's a premium service. But one of the things that happens at those brokerage platforms is they charge per contract. And so what it does is, if you are considering multiple ways to trade, right? And you're looking at like buying the stock, or buying a call, or buying a call spread, or selling a put spread, or even up to like doing an iron condor or something with like 4 legs, then the commissions on all of those contracts really add up really quickly. And then, of course, if you're doing it in, I want to do this, risk reward is small, like I want to actually do this trade 10 contracts, size, that you're getting like overwhelmed with per contract fees. So what we did is we said, we are actually going to charge a commission, which was a little bit of we were going zagging when Robinhood and Webull and all were zigging. But we said, let's just make it $5. So let's do $5 per trade and no per contract fees. And so what we wanted to do was like level the playing field between taking that contract, the fees per contract out of the decision making. You shouldn't be doing a call because the call spread is more expensive to do, right? And so anyway, that's the way we approach that. Now, we have had a lot of interest from, places, like Canada in particular and overseas. And we are actually working right now on a subscription version of the product. And what that would be is, people that maybe want to use the tooling, they want to be doing these multi-leg trades, they want to understand them better. But for whatever reason, they can't open an options AI account. And so that's coming in the next couple of months.
Cool. So that subscription would give you access to the tool, but not the brokerage part. Is that correct?
Exactly. So
Okay.
you basically get all the way to the end of like the trade ticket.
Yeah.
And it would say, this is what this is trading. This is buying this call, selling this put, selling this call. And and so basically what you'd be missing out on is the trade management and execution aspects of the platform. But all of the trade generation and all of the live data and all of the tools would be available.
Okay.
So back to the just the tools in general, as far as how the I know you mentioned the word to visualize the trade a little bit better, how the platform kind of translates that. But me and you could both be looking at the Mona Lisa and have a whole different interpretation. Who is your clientele as far as that you see as the best fit for you guys? Is it more experienced traders? Will they benefit the most out of it, or is it going to give a new options trader a leg to stand on? And really, because options are a scary field to get into, if you it's got a level of intimidation for sure. Would the new trader fare just as well as somebody that's been around the block on options?
Yeah, and this gets into a very interesting sort of regulatory aspect of the market, which we're not big fans of. We've spoken about this a little bit publicly. We have to be careful about, sort of going up against the regulators as far as how the options onboarding works in the industry. So unfortunately, the way it works is if you sign up for a brokerage account, and this is a Robinhood to, E-Trade, if you've never traded an option before, the only things that they allow you to do, they have something called level 2 options. And the only things that you're allowed to do are basically like buy calls, sell a cash secured put, which is a weird one that comes in level 2, and do things like covered calls against stock, right? Which, how many people own 100 shares of Tesla, right? Like nobody, right? So what we look at is that next step. So once that person is sort of like, they've opened up an options account somewhere, they've done a little bit of experience, they've done sort of these things, they're starting to get like, oh, I get it. Like if I buy a call, I need it to go up above this level, that sort of thing. The next step is to, go to level 3 options, and that is spreads. And going back to the regulatory thing is we actually see spreads as less risky in a lot of cases because they're higher probability. And the only aspect that's new to most people, and it's actually not that new if they've done cash secured puts, right? So in a cash secured put on a level 2 options account, let's say a stock's trading 100 and you sell the 90 put at $1. If the stock never goes below 90 between now and that expiration, you collect that $1. If the stock goes down to 85, you now own that stock at $89, right? Mm-hmm. So you've been assigned that put. One of the things with going to level 3 options is that when you're doing spreads like call spreads and credit put spreads and things like that, is that assignment sort of factor comes into play a lot more, right? Like the stock goes down. And that's one of the keys to sort of understanding is that, when you're short options, you can be assigned. Generally, that doesn't happen until the actual expiration, like 95% of the time. But and in most cases, you've either done, in the case of spreads, that spread's either finished max gain or max loss, which means those two strikes cancel each other out. One gets exercised, one gets assigned. It's just sort of cash settlement. And the other times is, sort of in between when you do the trade and expiration. If they go really far, like in the money, sometimes you might get early assigned, mm-hmm. right? But that is literally the biggest step from level 2 options to level 3. And that's a small part of all of the other benefits of probability and all that come with being able to trade spreads versus just outright calls and puts, mm-hmm. right? Mm-hmm. So we think the industry has this slightly wrong on like the weighting of those risks versus rewards. And unfortunately, people have to go out and buy 10 dumb single leg calls, and then they can apply for a level 3 options account. So going back, it's a long-winded way to go back to the question is where we are positioned is for that when that person's ready to graduate to spread trading and doing multi-leg spreads, they understand the options market enough to then take that leap into higher probability trading, mm-hmm. which is unfortunate. So the beginners get the bad trades, in other words, and then the people advance to the better trades. And we're there to meet them at the place where they're advancing to the better trades. And so what that audience to us looks like is people that are at that spot to the very experienced trader that's like, this is just more simple. Mm-hmm. I can do an iron condor in like 3 clicks, and I can see my probability and I can change it on the chart and I can do my exact trade instead of wading into the to the options chain. And what that looks like from an order flow perspective is, we were in this article in CNBC a couple of months ago, and they mentioned in the article that 99% of Robinhood's options order flow is single leg options. At Options AI, we're about 80% that's multi-leg, right? So we are the exact opposite of what's happening on Robinhood. And so that audience is basically the people not doing, our audience is people not doing lottery tickets. Now you can, right? You can come in on Options AI and you can buy a call. And sometimes that's going to be great. And sometimes you really want to just do that. But we're going to be telling you that you have like a 15% chance of that being of winning, right? And then we're also going to be showing you next to that trade, oh, by the way, there's a 65% probability of profit credit put spread that you could be bullish with, right? So that's sort of like where we're positioned. And the regulatory things of level 2 to level 3, anybody can go on their existing brokerage, or they can go on Investopedia or something to read about those different levels. But the one thing we would say, it's slightly unfortunate that when people dabble, they start to try to learn options, they can only access the bad trades.
Yeah, that's unfortunate. Now, do you have education available on your platform as well?
Yeah, and so we have, as part of it, we have Learn Options AI, so like learn.optionsai.com, and where we talk a lot about these trades, and then about sort of like the intent of like why you would use these trades, right? Like why you would want to add income to your portfolio, why you would occasionally want to use leverage, why you would want to use a credit put spread when volatility is really high, and those sorts of things. And then one thing I forgot to mention on the spreads is we only do defined risk spreads on Options AI. So what that means is, like, it's sort of a what you see is what you get. When you see a trade on Options AI and it says you're risking $600 to make $400 with a 60% probability of profit, that's what it is. We don't allow people to, or we don't allow users to just sort of, and there's no reason to ever do this, but like the one thing that spooks people in options markets is they're like, oh, I heard you can like lose your house overnight in options. And it's like, well, no, not necessarily. Not if you're actually trading, the correct way. I know a hedge fund would never have a naked call, short, right? Because there's like way too much risk for so little reward. And it's called, in options like market making, it's called picking up pennies off the train track. So it can seem really good, like just selling like calls and selling puts really far out of the money and just sort of collecting that $1, $1. What we would say is, wouldn't you much rather just collect 75 cents and know that the most you can lose is $1.25 or whatever, instead of $100? So that's the defined risk is like a really important part of this. And you can dial up that defined risk to be pretty risky if you wanted to, but you don't have to. And it's sort of the center of the platform is that your exact risk.
Yeah, it's really unfortunate. Dan and I were actually just talking about this in a previous episode about how your first impressions can really taint your future, I guess, in interaction with that particular market. And options is one of those things where the user is really set up for a poor first impression for the reasons that you just said, right? So having those naked calls or having those naked puts and not having the money in your account to actually fill it, that can set you up for that really poor taste in your mouth and never actually get you to a level where you can deal with somebody like Options AI and advance to that next level and really benefit from some of the opportunities that the options market present themselves with, right? So
yeah, and one of the two worst experiences that options traders have when they're, you could have this your entire career, but you could have it really right out of the jump, is you can have what you described, which is, oh my God, like I just did a trade and I have like a margin call or, and it's like, how did that happen? It's, well, you didn't understand what your position was, right? And then the other one is, I actually bought a call, the stock went higher and I didn't make money, or I certainly didn't make much money as I thought I would, or I actually lost money. How is that possible? And then the people are like diving into like the Greeks to understand like theta and vega and everything like that. And it's like, no, if you had just seen it on a chart, you would have realized that you needed the stock to go up above 108. And if it didn't, that you were going to lose money. And so that sort of thing, and that's going back to that 95%, 5% thing. It's like, if you understand, it's not that complicated. It's like options are, I always describe it as if you go to like a horse track and you understand like the favorites odds all the way down to like the long shots. The options market is the ability to place those long shots and, you know, sure thing bets at those various odds, but then having the ability to trade in and out of those all the way to the end of the race, right? And so if you can understand that concept, which is, oh, of course, if I'm betting on the favorite, I have to put more money down to make less. Or if I'm betting on the long shot, I have to put down a tiny bit of money to make a ton of money, but it's probably never going to happen. If you can understand that and then be like, whoa, I did bet on the long shot and now he's leading after like the first quarter, I should take this off because he's probably going to like break a leg by the end, right? And so that's the sort of thing with like options and those basic like sort of ways to see like how those odds are changing in real time. That's all options that's all options are. And if people, you know, it's sort of like, you know, like when you're watching like poker on TV and you're like, these people are so good at math. And then you realize they only have like 20 variables of the math to memorize, right? And they've done it so much that it just becomes easy. And that's all options trading is as well.
Right. So let me get this straight.
There's a big difference between the fun trade and the consistent trade, right?
Exactly.
Oh, exactly. Yeah. It's like singles and doubles are so much better than swinging for the fences.
So something you just said to me that caught my attention, and that was, you know, traders that take a long position, for instance, in options, and they wonder why it didn't make them profitable or they didn't win on the trade. Your platform actually takes volatility into consideration in real time?
Well, it shows you what we do is we translate it into the expected move, right? Which was, you know, something I was mentioning earlier, which is that expected move is like a live visualization of how options, you know, all of the options order flow is pricing an expectation. So you could look at a Apple chart and you could see the expected move is pricing a 7% or $7 move higher or lower over the next week, right? So if you are doing an options trade that is beyond that $7, you're essentially betting that the options market is wrong and has underpriced volatility, right? And it's a much easier way to think about, you know, rather than looking at a number that Apple's volatility is 47 and historically it's 40. And those are all, you know, important to keep track of. And we have all of that. But what you should be starting with is, does the options market have the $7 move in Apple right or wrong?
Gotcha.
Right? And so like if you're going into an earnings event in a stock and it's pricing some, you know, 20% move and you're like, the chances of this stock moving $20 or 20% is probably not that great. So I don't want to play outside of that, you know, or if I do, I want to sell outside of that. I want to sell options outside of that. And so that sort of intuitive way of looking at the options market, which is translating volatility into what the stock could actually do.
That totally makes sense. And like I said, the platform is it's very intuitive. I'd like to spend some more time doing it. So I'm going to check out your learnoptions.ai and look for that subscription service possibly. Will it involve, or will you have back trading availability on that at all?
We don't have any plans for that right now. And basically what we rely on is that probability of profit. Okay. And we feel like one of the things, I mean, there's lots of discussions about this internally, right? So there's lots of platforms out there and there are more services actually that offer like back testing and things like that. And so we feel we're fine with other people using what they already use, right? Like there's some great services. We don't mind being one tab open next to somebody else's tab. They're not we don't consider them competitors. They're only helping, right? What we're looking at is when somebody's going to make that decision on a trade, they should really be focusing on that probability of profit. And what that is, you know, the options market is extremely efficient, right? It's not like the market makers and the hedge funds and Goldman Sachs aren't back testing already. Like, so the options market's already doing a lot of that work for you. Now you have to make that judgment of, what am I good at? Right. So like a lot of people become sort of, we hear this a lot of times. They're like, I'm a mostly a credit spread trader. And what that means is I do a lot of iron condors. If I'm bullish in a stock and it's just sold off 10%, I love to do credit put spreads right below where the stock's trading. Or if I'm long a stock and it keeps going higher and higher, I love selling credit call spreads against it. And those sorts of things is like the person starts to like realize what they're good at and, like their own tendencies. And, we all see this, right? When we trade, it's like, oh, I just went outside my wheelhouse a little bit and that didn't work out so great, right? And so those sorts of things we see that already. And we want those people that are like, this is the best place in the world to do iron condors. And I love doing iron condors on options AI. Or, we have things like a scanner where, let's say, on a day like today, I think like the NASDAQ's up when the rest of the market's like down big. And so a lot of those, like on a morning like today where you're like, oh man, this might be the moment where, growth stocks turn around. And I have 5 stocks that I follow, and I've been itching to like get into some of these and waiting for the moment. On Options AI as the scanner, you can say, all right, I want to see credit put spreads in these 5 stocks, and I want them all at about a 70% probability of profit. And you can just do that real quick on like 2 sliders, and then we'll just put those 5 trades next to each other, and you can say, Google, Amazon, Tesla, Netflix, whatever it is. And, I want those 2 put spreads look great to me. I'm going to do those two put spreads.
Awesome.
So there's a bunch of different ways. There's chart trading, there's fast trading, there's scanner, there's things like that. And every time we add to the product, we look at, sort of what's out there and like, how could we make this infinitely more intuitive?
That's very cool. And my final question, because I know we're running out of time, is would this work with day trading as well for options?
Yeah, well, day trading options is interesting. There's definitely a segment of, the audience that does it with momentum, like type intraday trading and everything like that. You certainly can. And whether you should is the other question, right?
Yeah.
So for instance, if you're doing a multi-leg, so certainly you could come on Options AI and like buy a call and then sell it like a few hours later. And of course you have to have, here's another regulatory thing. You have to have $25,000 in your account to do that, or else you get a pattern day trading, warning after a couple of those. If you were like sort of trading momentum intraday, you could do it through calls or puts in very liquid things. If you're doing multi-leg options trading, you're entering in a market that's already instantly a little bit less liquid, right? Because you're doing multiple options strikes that are already wider than the stock tends to be, right? In something like Apple. So to like buy a call spread for like 2 hours and then sell, like you've got to be like really good at like getting your price both on entry and exit. A call in like SPY, yeah, certainly, right? It's going to be so liquid, you're only going to be giving up like 2 pennies on the in and out. But like when you're getting into like call spreads or certainly like, let's just talk call spreads or something like that. You're entering in a market that might be 35 cents wide.
Gotcha.
And so if you're only playing for the stock to go up 50 cents, it's not the best strategy, right?
Fair enough.
A call might be.
Okay.
So, yeah.
Well, CC.
But yeah, that's like sort of, I'm sure anybody that day trades has run into
I'm sure they have.
those scenarios, right?
CC, it has been a pleasure having you, and we will throw your contact information in the description. So if anyone wants to get in touch with you, they can. And we hope to have you back another time in the future to talk more options. So
excellent. Thanks for having me. Great to meet you guys.
Valuable conversation. And thank you guys once again for listening to the Real Life Trading Pivot Podcast. Each and every week, we will see you guys next week for another. Later, guys.